And we're live. Good morning. Today is October 29th, 2019. My name is Wale Okabola, Spartacus Trading Corporation, here to bring you a live trade. Please refer to my prep report for October 29th so you are familiar with what I'm thinking and what I'm looking at based upon that report. So the purpose of this live trade is just showing or demonstrating how I execute on the information that the market gives to me or shows me. And without Window Trader Blue and their software, there's no way I'll be able to see and interpret the data. That is very complex. So thank you, Window Trader Blue. All right, we're getting ready to open in about 4 or 5 minutes. I talked about in the prep report the importance of monitoring halfback. Where does value develop in regards to halfback? We have the potential of opening in the gap. We have a gap here. Maybe this because I'm ready to trade, so this might not be as clear for you as you would like. But if you follow the report from yesterday, you should understand what's going on. All right, so I'm following this gap. See if we can get acceptance in this gap based upon where value develops in relation to halfback. All right, so right now looks like this is an important reference right here at 35.50. That's just about the overnight halfback. Something happened where we have some change here. This is the only two wide right in the middle, so we have two areas develop. Sorry, two balance areas, and that can probably be explained. Yeah, let me show you my overnight chart. Basically, the upper balance is Asia, the lower balance is Europe. So we'll see. We'll see how those guys are. Who's going to win today? All right, based on the analysis, you know what to look for in regards to halfback. So we're going to just sit back and watch. It could be a go with trade to open up, start the morning off. If that's the case, you want to get outside of the low. You want to stay outside of the low. You cannot afford to come in and out of the low. If you come in and out of the low, it's a reflection of confidence to the downside. And that means that the market is really not that confident. And if we are not, because we closed below the point of control, which is 14 wide, 14 wide. If we can't get acceptance, if we take out the low and can't get acceptance below the low, and we come back in and we keep playing around in and out, more than likely we're probably going to come touch this point of control that hasn't been revisited. Think about it. We get outside the low, we should stay down. You can get a test. One, two is pushing it, but maybe two, but three, four, come on. So anyway, we get out, we're in a gap. So there's nothing holding this market up. Monitoring for continuation. First, stay below the low, stay below the former all-time high, still in the gap, come down, come back within that former multi-week balance area, fill the gap, and underneath the gap, I talked about it. There are some stops, so we could trade lower from the gap. There's some stops under here, okay, and then we have I think an overnight gap fill. So that's what's going on. Got 2 minutes before the open. Take any trades, I'll share it with you. All right, I'm going to pause the video and bring you in for the open. Stand by, everybody. All right, folks, we're open. We got an incomplete comparator at the low. That's a signal to me.
Order
Order
working.
working. Teed up to take a short. I'm teed up at 33 quarter. Okay,
Order
that's
cancelled.
off the table right now till I get a good looking high. Remember, I have a 14 wide.
Order working.
That's a good looking.
Order working.
That's a good looking high. We got 14 wide. We got a weak low at the former all-time high. Also an incomplete
Stop
comparator.
filled.
I am filled at 33 quarter. My stop is going to be at 34.70. Call it 35.
Order working.
Order working. So now I'm just monitoring the trade. Blue line will signal my entry, or the red stop is a tick above this high, so a risk is less than 2 points. We're in the gap. We need to behave like we're in the gap. We need to stay, as I talked about, below, stay below yesterday's low. I am basically stay below my entry. So right now, when we're in the gap, I just want to judge the confidence, watch the volume. We still got a weak low right there. The low is right there on the former all-time high. Not the best low, but it could last. Okay, we coming back in. So if there's a problem, we come back in. And so I'm prepared to be the first out the door.
Order cancelled.
I adjust
Order
I
working.
adjust my stop. One stop is at 34.75. Another stop is at 35. It gets stopped out. No harm, no foul. Just readjust situation. Just know that I quickly got out, and I'm just gonna monitor the market's desire to go and tag this point of control that hasn't been revisited. And also, that's a clue that the market probably is not as weak as we would like it to be. Value right now, at least open up, is clearly lower. I want to watch value development. Yikes, I got fool's gold against me. So I would not be surprised if I'm stopped out, at least initially. If we break, if we break, if we don't break with authority, I'm going to start taking some contracts off. Because the reasoning behind it is we're in a gap. It should behave like we're in a gap. Because I have some overnight stops against me. Yeah, like really against me. As we begin to trade at 34.50, I'm probably just going to exit my trade and I will reset. Because I already know what's against me. There's no guessing anymore. Probably was a little early getting in, but it's okay. I get stopped out. I'll pause the video and bring you in on my next trade.
Order
Okay,
cancelled.
I'm flat. Got out well ahead of my stop. No problem.
Order working.
I'm prepared to get back in because I know I got out prematurely. And if the market really is going to do something, it'll slam right through me. And if I'm
Order working.
clearly and truly wrong, it's going to continue to go up. I don't have to worry about getting hit. My limit order is right back at the blue line, 33 quarter, and then I also have another one at 33. Okay, market's going to go get that fool's gold, hopefully, clear that out my way, and then I can definitely now, you know, I'll be okay taking a short. I realized something was against me. I wasn't going to play around. But if I was premature, that's fine. The market will come and it needs to come and go because we traded out and we came in. We shouldn't come back in again. If it's legit to the downside, we come back in. I need to bail early once again because that means the downside is really not that legit. Right now, the market's not showing that much confidence.
Stop
I'm
filled.
in on my first lot at 33 quarter. Stop is at 35.
Order working.
I staggered my entry just in case it's a head fake. I got another entry here at 33.
Stop filled.
That is hit too.
Order
So
working.
what do I want to see? I want to see this market trade lower. If the market comes back out, I have to bail it once again. I have to bail.
Order cancelled. Order
I
working.
got a staggered stop. One stop here at the high, one stop a tick above the high. Now, if we get outside of yesterday's range, this market needs to behave like it wants to go. I don't have any patience with low confidence because I know what's against me. We have a 14 wide. And if we're not showing any confidence getting out of yesterday's range, as I talked about this morning, and stay outside yesterday's range, there's nothing going on to the downside, at least for now. I had no problem bailing early because if the trade works this time, I can easily make my money back because I think I only lost like 5 ticks. For the sake of time, I'm going to pause this video and I'll bring you in when there's something to do. All right, folks, I got flat again. Market is showing extremely low confidence, trading lower, which tells me that probably it wants to trade higher to tag this point of control. So that's two trades where I got out early. Well, not even early. I just did the right thing and bailed on the trade. As you can see, I would have got stopped out and it's going to stop me out again at max loss. So I bailed once the market trade below the open, came back across the open. So I bailed on the trade. Okay, now we tag the fool's gold. Okay. All right. Now, let's see what the market wants to do. If we cross that open again, we're probably going lower. Probably, maybe 33 quarter.
Order working. Order working.
That's a good high, good enough for me. 33.50.
Order cancelled. Order working.
This high last. This market takes out the open. I am short at 33.50 and 33 quarter. It's not that I'm hell bent on getting short. It's just more opportunity to go short. Till the market proves otherwise. The market proves otherwise, it's going to do what it's going to do, and I don't have to worry about anything. Then I can quickly readjust and see what's going on. So I'm taking my
Order cancelled.
limit order off.
Order working.
I'm teed up again. Looking at the five, see where they're shorting. Who will I be joining? So I know what they need to see. If I get hit at 33 half, my stop is right at the high at 35 half. If I get stopped out again, I'm going to take a break. So it's a 5 minute chart so I can see what's going on. The buying between this line and this line. So I got a better understanding of what's going on. Okay, looks like I'm going to get hit. I am short at 33.50 if the market decides to go. I'm going to pause this video. I'll bring you in if I'm hit. Okay, folks, I'm hit again. I'm short. I'm going to place my stop at 33 half
Order working.
and 35 half and 35.75.
Order working.
Now, if I get stopped out, that means I'm just clearly wrong today, and that looks like that's what's going to happen. And so I just need to back off right now and take a break. It means I'm just following price. I'm not paying attention to what's going on. And that's a weak high. That is a weak high against me. And there's a weak low for me. And the market has no confidence. get up to 35 quarter, I'm out of this trade. Even though my stop is above, I'm not waiting for my stop to get hit. I'll bring you in just for the sake of time. I'm going to pause the video. Okay, folks, I got flat again, so I'm going to take a break and reassess this market, figure out what's the next move, and that's the right decision to bail early again. More than likely, we're going to tag this 14Y. So I just want to now concentrate on value development going forward. See, makes sense to be the first one out the door. There's no need for me to wait around. Okay, so I am cool. I'm perfectly fine. There is no ego trip because I lost. The emotions are totally tamed. Just sit back and just reevaluate and see what opportunities the market's going to present me in the next 6 hours. Okay, folks, stay and by. So, folks, what's going on? The market hit the point of control that wasn't revisited. You can see from the overnight structure, there's probably some stops above here. And that's what's going on. These stops are being hit. So the bigger question is what happens after these stops are taken out. We want to see where value is developing in relation to the half back. The green line is half back. Value is starting. It's still developed. It's early, but it's still lower. Okay, so this expected behavior doesn't come as a surprise. So we take out these stops from overnight. Now we're approaching the overnight high. At least if you're long, that destination is the overnight high. The real question is what happens when we take out the overnight high. Taking out all these stocks from Asia. Remember, I talked about in the morning uh, report and my morning analysis. There were two distributions. There are two distributions. Sorry, I'm watching this market. There are two distributions. We opened in the lower distribution. Now we're in the upper distribution. You can play the balance rules with these distributions. The destination is the overnight high. If we don't get that, value, as you can see from here, is still overlapping to lower, but in B period can easily make value unchanged or overlapping to higher. That's a good looking high at 32. Because I lost on two trades back to back, I'm extra cautious. I don't really consider it a loss. I knew what was against me. So I bring you in, folks, if I'm going to do anything. Okay, folks, I got a entry to get short at 37.75. We crossed that half
Stop
back.
filled.
We're in. I'm in, I mean, and my stop is at 40.
Order working.
Uh, what am I doing? Blue line is where I'm in. My entry is right there on the half back. I'm going short. Why am I going short? Well, I'm not buying this low on the 15 minute. They bought right off the settle. I'm not going for that low here. It could last. I could be wrong. because they bought right off the former all-time high. We knew that there were stops based on the structure. Stops are hit. We stopped short of the overnight high. Now, in order for this trade to work, we need to go down and take out A2 low and continue lower, get into back outside of yesterday's range, but go down with some conviction because value now is overlapping to lower, at least for now. B period, that's where the rubber meet the road more than likely. B period is getting ready to open in a minute. B period needs to take out one of the two extremes to establish one time framing in either direction, either long or short. If the market is going to establish one time framing long or up, I'm the first one out the door. And that would make three back to back losses. That shows that I'm not on my game this morning and shows I just need to take a break. Okay, folks, B period's open. This is a crucial period for my trade. We got an incomplete comparator right there on the low. I'm going to have another order to get short at 35.50. Well, not anymore. High's not good. So I'm just going to leave this one order on. I'm going to move my stop down one.
Order cancelled. Order working.
My stop is right here at the high, ensuring that I'm the first one out the door. And I probably would take the trade out off before I even get stopped out. Because you get to the high, more likely we're going to one time frame, at least from B period, right? That high is legit. 35.50. I got another order
Order working.
to get short. So the blue lines, I'm already short at 38. Market trades back into my zone that I've already predefined off a good high. I'm taking that trade right as we get in. That's at 35.50. So 35.50 is not on yet. That's a weak low again. Again, they bought twice off the settle. Twice off the settle they have bought. They being short-term traders. It could last, but what's the likelihood of that lasting? Odds really don't favor it. So maybe I move my stop up to 36. I mean my limit order. I'm going to move it up to 36 to get in at 36. Hopefully it'll take me into that zone and we'll go after this low. I just want the market to establish one time frame in either direction, preferably lower. I mean, yeah, one time frame in lower because I'm short, right? Oh, wow. 25 minutes on this video. I'm going to pause it. Wow. I'm going to pause this video. Stand by.
Build.
Okay, folks. My second entry, second contract got hit at 36. So I have an average fill at 37. So I'm going to move my blue line. 37 is my average fill.
Order working.
Got my stop in. Still right there at the high 39.75. Now I'm monitoring this trade. This trade needs to show some aggression. I'm trying to work with this trade. I'm very tempted to put my stop a tick below break even.
Order working.
I got one stop a tick below break even.
Order cancelled.
This trade got a lot to prove to me.
Order working.
I'm in a risk-free
Order
trade.
cancelled.
I'm in a risk-free trade. I got both stops a tick below break even. Confidence is just not that strong to me. I've already taken a loss. I'm not going to make it worse. And I'm not going to hold on because of pride. So I'm showing you how I check my emotions. If it's going to work, it's going to work. If not, I get stopped out. The market gives me a better opportunity to reassess what I want to do because this is a good low in my zone. It's either going to do one thing, come out or come back and retest. If it retests, I'm the first one out the door. I'll just start chipping away at my loss. Okay, looks like I'm going to get stopped out at break even. I mean, a tick below break even, which is a shame. That low B period.
Stop filled.
All right, I'm out. That B period low is weak as well. All right, I'm out. I'm out. I'm out. I'm out. I'm out. I'm out. All right. Let's see what happens. And I'll just reassess. See what's going on the five. See that, folks? See where they bought? Didn't even see that on the five. Just instincts told me I need to protect myself because the market is stalling when it has every opportunity to break. They bought it right off here, trying to take it higher. First one out the door. At least I did not lose anything. So I'm constantly monitoring my emotions. We come back in my zone off this. The high is weak because it's right there on the half back, but I'll still take that trade. Maybe just a light size, 35.50. Comes back in my zone. I got to take my trade.
Order working.
As long as this high still remains, that's the basis of me taking that short. Let me bring up my five. Okay, I'm in a losing day thus far, but at least I'm showing you how to manage your trade and emotions. No one's going to have a perfect day every day. I would love to, but it is still early, so there's still a chance. There's still a chance to make some moolah. All right, I'm gonna pause it. Stand by, everybody. All right, bringing you in to show that prudence over profits is what I teach my traders. Just me being prudent and not getting greedy, worrying about the profits, allowed me to manage that trade and just put myself in a risk-free trade situation, which is good. Take this order off.
Order cancelled.
Ideally, I should have taken one contract off, but I knew the potential. But because the potential is only that potential, the potential wasn't realized, I just protected myself using all the instruments to my disposal, and I'm not lying to myself. I'm not going to be in wish mode, hope mode, pray mode, anything. It either is or it isn't, and that's that. So, what we have today is a low confidence day. The market had the ability to trade in the gap and go lower and possibly fill our gap. The market thus far has showed no desire to do so. Okay. I talk about monitoring value, where it's value developed in relation to the half back. It's still overlapping to lower. There could be a chance still. I just have to give it more time. Value consists of price, time, and volume. That's how you get value. So I got volume. I see where price is, but we don't have enough time to make a come to a better conclusion of what value wants to do. So with knowing that, it's just hang out, chill out, but also be able to anticipate what could happen. Thus far, we did not take out the overnight high. Okay, and we're back in this balance. I would call it from Asia. We're back in that balance from Asia. Okay, should be trading higher. This high is not that spectacular because they sold it from the value area high. So what are we dealing with? Mechanical traders. That is also supported by the 5 minute chart. How many folks you know trade the 5 minute? Lots of traders. Bought up that line. We understand who is supporting this market. So they need to get what they need to see. They need to get what they're looking for. If they don't, what do you what do you think they're going to do? Okay? I'm not always looking to trade against them. I could trade with them. That high is weak. B period high is weak, so I have no interest of fading them. I need more conclusive proof that the market, in fact, wants to trade higher. It's up higher because I talked about it with you just now. That there were stops initially. We opened, traded, got those stops. Now, if you're long, you're mechanically buying, just using the candlesticks, using your charts. What do you want to see? You want to take out this high, of course. Or if you're using the profile or whatever you're using, your true destination is one, the early morning high, two, the overnight high. So the overnight high, that's where the rubber meets the road. That will give me a better idea of what the market wants to do. I talked about some folks, a trader who sold 1,100 contracts, somewhere around 38 quarters, something like that. So if it was new money selling, they're going to begin to feel some pressure. Let me go ahead and label the overnight high. They're going to begin to feel some pressure, and what do you think they're going to do? It's all a game, folks. It's all a game. So twice from there. Anchor is up. Value is overlapping to lower. For me, it's basically just watch and see. Watch and see what happens going to the upside. So therefore, um, there's nothing for me to do as of yet. And the Fed is tomorrow. Today is the beginning of their meeting. So as the day goes on, you would imagine that the day start is going to start to get sluggish. Okay, the market attempt to get in the gap and fill the gap. No interest, no takers, no sellers. Going back to where I talked about my prep report, the folks that trader who sold 1,100 contracts at the 38 quarter area. If it was new money selling, they're feeling a little heat, right? If they were just taking their position off from a long, well, then the market should have no problem trading higher because that's money coming off the table with no more sellers. I'm only concerned if that was a new seller, new money selling. All right, folks, I'm going to pause this video because I still interested in trading today, and I just want to share with you win, lose, or draw how it's done, or at least how I do it. Hold on, folks. Okay, folks, I'm back. Market's still yet to prove it wants a time frame. It has the potential time frame and higher. We have a poor high right there. We have an incomplete comparator. Excuse me, although that's a weak low right there. The weak lows are stacking. I'm not really prepared to take a long. I see who is bought. We see who's bought off that. You know what they need to see. The reason why I did not buy off this because I'm just questioning the potential to the upside, knowing that the weak lows are stacking up. Walk you through it. They bought off half back. They being short-term momentum traders, whoever. They. They bought off half back. They bought off the overnight half back. This is the overnight half back. They bought off that as well. That is weak. It's not true buying. Doesn't mean we can't go up. And they bought off this former all-time high. So I need to see some establishment of one time framing to be able to get on board. And at the time the market pulled back to that, I was not interested. The key to leaving all of this weak structure behind is the market double distributes higher. The market must double distribute higher and hold that double distribution. If it doesn't, we just have excess. Now, taking a step back, not eager to trade, we have a good potential if the market gets some elongation. If the market gets some elongation from a potential double distribution, if we get some elongation, that's going to lift value because right now we're getting three wide. Now time is starting to kick in. So I'm no longer looking for anything on the downside as of yet. I have some clues, but if I do take a short, it's going to have to trade down with aggression. Right now we are one time framing. I don't fight one time framing. Just let it ride out. The question I ask myself is this legit buying or is this just pressure on some stops? Remember we talked about those 1,100 contracts, those that were bought, sold. I'm sorry, from yesterday. I think at 38 quarter, and another one it's 600 contracts or so. Just refer to the prep report for the 29th. You'll understand what I'm talking about. When you look at the overnight structure, there's probably some more stops that they're taking out. Now the rubber meets the road, as I talked about here at the overnight high. We are here now. If it's true buying or if the market is very optimistic, all is well in the world, we're going to continue the time frame higher from the overnight high. Time will tell us that. If not, we can get some excess and perhaps get some liquidation. Now, I'm not saying liquidation all the way to B's low or A's low, but at least there would be some liquidation. So I'm just trying to observe this market and kind of get a feel of what these traders want to do. Should I join them? Should I fade them? Or should I stay on the sidelines? Three choices you have. Right now, I'm choosing to stay on the sideline because now I want to recoup what I lost, so I have to be extra cautious. If not, I can recoup it tomorrow, no big deal. Not the first time I had a losing day. It won't be the last time, but I concentrate on keeping my emotions in check. All right, this is a weak high. We'll see if they push it through. This is the longest video I have ever made, 40 minutes. You don't want to fight one time framing. If your bias is still short, it's over when it's over. You don't want to get smacked. And if it keeps shooting up with aggression, you know that stops being hit. Boom, 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 boom. Stops. 40 half. That's a good high. I would short
Order
at
working.
40 half. Right now, I'm sizing up my risk. I'm going to go 42 quarter. I got an entry to get in at 42 quarter. Stop will be above that high. That's a good looking high. If that high gets taken out, well, I don't get hit. Blue line represents where my limit order is. Why? Because I understand stops are being triggered. If there's real more new money buying, we shouldn't get back within. Not off that high. The market should propose, knowing that there's probably more stops up here, should propose a double distribution to the upside. Asymmetrical trade, quarter, risk is defined, 7 ticks. I can live with that. Now I'm fighting one time framing. So this trade has to work soon. If not, I'm out of here. Although my stop, if I get hit, although my stop is at 40 quarter, I'm going to watch this trade because as soon as we start, if it starts to go against me and starts to trade back out of the overnight high, I'm not going to wait for my stop to get hit because I know I'm fighting one time framing. Okay. I'll just live with it. But it's going to be a short loss, so that makes it easy to overcome. I'll pause the video, bring you in if I get hit. The key to this trade, this high must last. This has to be the high. If it's not the high, I take the trade off. I think this is a perfect time to give you a quick lesson on value when I talk about where does value develop. You can see value is now starting to overlap on both sides of halfback. The key to today's trade for me is where does value develop, above or below. As long as value is overlapping both sides almost evenly, that tells me do not get fooled by price, either up or down. And I could get hit. If you do, you got to play the trade tight to the vest. Look to adjust your stop immediately. But it just says it's probably going to be back and forth action. The only thing that's going to negate value is a double distribution that holds, or suspension of value one time framing up. If we one time frame up, eventually it's going to start having value overlap to higher of my main reference of half back. So that's how I look and use value when I use value for a reference. These are the things I teach my traders, how to consistently do this and keep your emotions intact. But at the same time, not being frozen where you can't do anything. The reason why I would take the short, value is only overlapping both sides, but overall value is overlapping to lower. Okay, I have a weak low here at the half back. I got a weak low at the overnight half back. It's not true strong buying, and I have a weak low at the former all-time high. If it was true buying, they wouldn't wait for that. Then I have more proof of what was going on. I know who's buying and from what trend lines are they buying from. This was the one I talked about way back, and this was the other one that I talked about. So I understand who's pushing it up. This is the 5 minute chart, by the way. Let's look at the hour real quick. Okay, that trade I'm interested in is off the table.
Order cancelled.
All right, this is what's going on the hour with time framing. Last 2 hours, we're time framing higher. It's telling me don't fight it, even though on the shortest of time frames, I understand who's doing the buying. This is momentum buying, 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 buying. Okay, trading above the overnight high. So it talks about what did I say? We probably have stops of here, above here, getting hit. The key is now, can we stay above the overnight high? Let me take this blue line off. Can we stay above the overnight high? And now we are approaching all-time highs. Get all-time highs. Can we keep that double distribution? That double distribution will negate everything I talked about to the downside. That double distribution hold, then my focus begins to be to the upside. So time will tell. And given the fact that value is overlapping to both sides, it tells me to chill out. Chill out, big boy. So that's it. Showing you how you're able to keep yourself out of trouble to execute. If you were long, I'll keep talking like I got a short bias, right? If you were long, you want your stop right here. You don't want this double distribution to close, and you want to sell into strength. Sell into strength, okay? Because you know you're hitting some stops, and you want to see if it's more than just stops being hit, but new money coming in. Also, remember our fellow at 38 quarter? At 1100 contracts or so. What do you think if because we don't know what he is, right? I don't know what he is. If he was a new money seller, what do you think he's going to do? He has to start dumping some contracts. Right now, I don't see any bulk sales or buys. I don't see anything. So this market can trade up and continue to time frame up because there's no sellers as of yet. Asymmetrical trade, take the trade coming back into the all-time high, but you're fighting one time framing. That trade needs to work immediately. So I don't know necessarily if it pays to get short unless I see a good high, and asymmetrical trade is where the risk is defined. Ideally, I don't want to do anything. It's too late to get long. Who is buying at the highs? Really? Who's buying? Only person I can think of is buying, or people are buying, is shorts covering. And if since I did not get in on this trade, that's that. The ideal location is to get in as the market comes back in, but that would be the first test. You don't know if this was going to happen. You have the benefit of looking after the fact. If it was multiple tests, then I would have got long. But at the first test, it came in and stayed in. I didn't know that. My sign to get out of my trade, where I got myself into a risk-free trade on my short, is when the market traded in my zone and died. That was an immediate alert. Don't be in hope mode. Get out. All right, folks, I'm going to pause this video. I know my max time limit is 1 hour. After an hour, I'm stopping with the video, and I'll continue to trade today. But I hope you learned something. On a 15-minute basis, this is a week high at an all-time high. How strong is that? Not very strong. We could come back and take that out easily. There you go. See? Now, if a good high, a semi trade, 42 quarter, off a good high, a semi trades to take it coming back in the all-time high. Maybe in on a closing of the double distribution.
Order working.
I'll spec it. Well, it was based on that high, 42, 44, 44. I'm figuring out my risk before I even take the trade to see if the risk reward is even worth it. I'll pause the video, bring you back in, folks. All right, folks. Stops are getting hit.
Order
I'm out
cancelled.
of that trade. Well, not out of the trade. I took the limit order to get short. Another reason why I had a short bias is because everyone knows I have a couple of options long that I talked about using that monthly open from this month, October. So as long as the market trades higher, I'm still winning. But I was looking to hedge and protect that position with any opportunity I had to go short. So just because the market is trading higher, I'm taking short losses on my shorts. I'm still winning at the end of the day because of the options I've taken. Um, that chart doesn't show it. Since October's open, so that's at 87. Since 87, I've been long some options that goes out a month. I've been long some options that go out a month. So um, again, no harm, no foul for me. All right, we could come back in. That's 46. That means I'm risking about 4 points. I don't really think it's worth it because we're still one time framing higher. Then we have a potential double distribution. I call it a dynamic double distribution. All right. I got plenty of time to get my money back on those shorts. So I am just going to hang out. I am getting hungry. So I am going to grab me a bite to eat and come sit down before 12, see what this market wants to do. If it starts to get sluggish, mind you, we have Fed Day tomorrow. We have Fed Day tomorrow. So, folks, you probably want to keep your powder dry. So, with Fed Day tomorrow, as the day goes on, the market could get sluggish. So, I'm not looking to force anything. So, with that said, I'm going to conclude this video. I hope this video helped you out in some way. If you're interested in learning more on how to execute and become a consistent trader that wins. Consistency is the key. You're not going to win every day, but consistency is the key. And to also learn how to use different tools to your disposal. Like when I talked about that option that I'm long, so it really makes me no difference. Uh, if the market continues to trade higher and I get stopped out on my shorts, it really doesn't matter. Um, but just to learn to be able to apply strategies like that to constantly keep the odds in your favor so you're trading with a cool head. These are the things I teach. So please, please, please don't be bashful reaching out to me. And we'll talk about interviewing you and see if you can qualify as a candidate for the training program. I like to only deal with serious traders, traders who are very serious in their development. And given the fact that we're getting close to the end of the year, I believe personally now's the time to really start tightening up. So that way next year you'll have a breakout year and you're prepared for next year. So anyway, this is Olawale Okabola of Spartacus Trading Corporation signing off. Take care, everybody. Apologize for the long video, but I hope it helped. Bye.